Welcome back. Just keep an eye out on a couple of stocks. ICICI Bank is at the low point of trade. The other one which is seeing some profit booking is HUL. The FMCG stocks have done well largely. And ITC is the other one which is down about 2% as well. No incremental negative coming in from the GST Council meet for ITC. In fact, a few positives in terms of lower rates for FMCG as well as stationery. But speaking about the GST, let's focus on the hotel space. GST on rooms equal to or under 7,500 rupees will now be at 5% without the input tax credit, as against 12% with input tax credit earlier. And for rooms above that, we have 18% already. Sanjay Sethi, who's the Managing Director, CEO at Chalet Hotels, joins in. Thanks a lot, Mr. Sethi, for joining in. The key discussion point is that of GST. But I'm looking at your average room rates over the last many quarters. They've been upwards of 12,000 rupees. So does this really make a difference to you? That's point number one. And secondly, how significant is the input tax credit element, 5% without input tax versus 12% with input tax? What is the delta that it makes?
Sure. Thank you. Firstly, I want to say that I've been watching the CNBC TV18 coverage for the last 2 days. It's been fantastic. I mean, it's been so informative and so helpful to all of us in the industry. Look, it's been a great GST announcement. I think the GST 2.0 has really reset the vision and focused more on the nation building. And I think Sabka Vikas is pretty much the theme in that one. This will definitely spur growth, give an impetus to the Indian economy. And we believe consumption is going to increase multifold from here onwards. For Chalet itself, as you rightly pointed out, we do not get either negatively or positively impacted from a GST perspective, but the positive story for us and companies like us is that it'll create a huge amount of liquidity in the market, and people who like to spend on experiences are likely to visit hotels more often, both F&B and to stay. So from that perspective, a very strong positive for the industry. Coming to your point regarding the 7,500 rupee tax GST bracket at 5% without IDC, look, it's a welcome move that we move to 5% for the lower end of the market. ITC is, I believe, a miss, an anomaly that still needs to be corrected. This is how we look at it. Look, I think the number of 7,500 is incorrect. It's been there for many years now, and we need to sort of move it upwards. So there are my three recommendations are, get back the ITC for hotels that are in the slab of 5% GST. 2, increase the 7,500 limit to 12,000 rupees limit. And then, because we don't want to go on big, talking about it every year, I think the cutoff limit of room rates should be linked to CPI, and therefore an annual adjustment can happen automatically without needing a GST council meet, because this can then be directly linked to that. But look, overall, very growth-friendly budget, very excited about the times ahead for all of us. And this combined with the demand and supply arbitrage that the industry has been facing, I think the next 3 or 4 years continue to look very, very strong.
Right, Mr. Sethi, as Puneet Chatwal also earlier said, that anything in the right direction would be great. Obviously, how much better could it have been with the removal of ITC and increasing of that 7,500 limit is everyone's conjecture. We'd always want more, but for now, any step in the right direction could boost some bit of hospitality. But Nigel.
Well, hi, good to see you, Mr. Sethi, and you're sounding very, very optimistic about prospects. Let's get a couple of more details from you. How would you treat F&B revenue under the new GST regime? Could that as well see a boost?
No, so look, as far as Chalet is concerned, it doesn't affect us, because if you sell even one room over 7,500, you're taxed at the old GST of 18%. So that'll continue. So no changes in that. But again, I want to come back to the point that there's going to be a lot more liquidity in the hands of the consumers, and that should spur F&B as a whole. And we are very excited about that. See, another thing I do want to add here, Nigel, is that at our category of hotels, our focus is not to sort of squeeze the ARRs down and remain under the 7,500, 10,000, 12,000 mark. Our focus is always going to be to grow the business and grow the rates. With that in mind, whilst I wear a double hat of the Hotel Association of India, NCI, Western region, and I need to highlight this anomaly that's happened on the ITC side for 7,500 rupees and below room rates. At Chalet, we're not concerned at all. Our focus is going to be continue to improve the RevPAR of the hotels.
We understand that. But, just to build on to Nigel's point, when he spoke about F&B, I just wanted to understand, for Chalet hotels, what proportion of the revenue comes in from F&B and how much of that would be F&B because of the resident guests and how much of that would be external? Because restaurants are all at 5%. So if I just were to go to any of your restaurants and eat, would I be charged 5% or would I be charged 18%?
So it is 18%, as was the case prior to this reset here. So there's no change in that. You asked this question about what's the mix of residents and non-residents. Roughly 60% of the business that we do is non-resident because we also include the banquet business, the MICE business in F&B. 40% comes from residents. Largely the all-day diners and specialty restaurant is very resident focused, whereas banquets and bars are non-resident focused.
And on the input tax credit itself, could you give us an example, say, for instance, for every other hotel, and I'm not speaking specifically on Chalet hotels, for all the others, which say, for instance, spend about 100 rupees, earn about 112 rupees, how much would the input tax credit component be? Now they would earn 105 rupees, but they wouldn't get that extra input tax credit. We just wanted to understand from a layman's standpoint, if you could help us with numbers,
Let me look at it like this. So let's talk about the room revenue because this is largely impacting the room revenue parts. I'm going to take that one segment from the P&L of the hotels. So if you were getting, say, 10,000, let's take 1,000 rupees as a reference point. If you were charging 1,000 rupees for the room, at a tax of 18%, the guest would be paying 1,180 rupees as a whole, but the company would get the credit for that 118. So it was beneficial for the hotel company over there because ITC was allowed. Now, because ITC is not allowed, for the 5% tax range, what will happen is the consumer's cost will come down from 1,118 to 1,050. But now this 50 rupees will have to be paid out by the hotel company. And therefore, there's a marginal increase in the reduction in the profit margins. This, however, is now going to be set off on the cost side because a lot of the consumables in hotels have had GST reduction, right from linen to bath towels to toiletry supplies like toothpaste and dental kits and all of that. And of course, food items, televisions, etc. So all of that has come down. And therefore, combined together, I don't see a negative impact. It will only be positive. It would be far better if we brought back the ITC for the hotels in the 7,500 and below category rooms.
All right, very quickly, sir, before we let you go, I've been quite impressed with the facilities you'll have here in Powai. It serves as a good staycation, actually. But on the whole, for business, how has occupancy been? There have been heavy rains in various parts of the country. Has it got affected?
So, Nigel, while we don't give numbers that have not been disclosed in the market, yes, I think all India, we've seen the havoc that monsoons have played this year, whether it's up in the mountains or down in the plains. And there have been days when hotels in specific cities have suffered on account of that. We've also had frequent flight cancellations, etc. So all of that combined has had its impact. We still expect to grow overall in the quarter. How much it will be determined in the next 3 weeks or 4 weeks or so.
All right, we take that point. Thanks a lot, Mr. Sethi, for joining in and giving us an outlook on the hotel industry, but more importantly, telling us how this has been a step in the right direction. And you've given your wants. Hopefully the government and the others are listening because they want to boost tourism in the country as well. Take a short break, come back on the other side. More on the markets and stock-specific action. Stay with us.